Namaste and welcome to another episode of the Bharatvaarta Podcast. It has been a tough year for us from an economic perspective, but is the worst behind us and are there signs of a recovery? That's the topic of discussion on this podcast. And joining me are two eminent speakers, Nirav Kanodra and Prathamesh Godbole. Nirav is an investment banker based in Singapore. He has extensive experience in sales and trading functions. His comments on economic issues are widely followed on social media. He's also a budding cartoonist. So welcome to the podcast, Nirav.
Yeah, thanks. I've been like a big fan of Bharatvaarta, and this is actually like my first podcast. So as a listener, I've been listening to various podcasts, but This is the first time I'm contributing to one. Glad to be here.
Fantastic. Glad to have you as well. Prathamesh is a market trading specialist. He's currently building TradeStream, through which he hopes to simplify technical trading and charting with the platform. He has been writing about macroeconomic trends for a while, even on Twitter, I suppose. Welcome, Prathamesh.
Thanks, Roshan. Glad to be here.
Yeah, so very glad to have the both of you on this interesting podcast. Maybe to start this discussion, we can do a high-level view of how the economy is poised at this point of time. So, Nirav, your comments on that?
We've had like one of the most strongest and brutal lockdowns compared to a lot of other countries, right? So we've had like a few months with economic activity really stalling. And now what we are seeing is we are seeing some green shoots. Now you can debate whether it is, say, pent-up demand or whether it is actually where you're going ahead. If you remember, if you go back pre-COVID, it's like really long ago. But if you go back to like Q4 in 2019, like October to Jan 2019, even there, like the economy wasn't really, you would say, like doing really well or strong. We've had all these aspirations. And it was like 2 years ago, you're talking about like GST collections, monthly GST collections, 1 lakh crores. And now it's cratered down. And now again, it's coming up again. So I would say like, see, some of it is pent-up demand. And a lot of people who could not consume anything for like a few months, now they're saying, oh, I need, or like, hey, trains are not working in certain places. Metro or buses are like running at half capacity. I need a two-wheeler. I need a car. So I think you're seeing a bit of that. You're seeing a bit of delayed consumption, but definitely we are seeing some sort of green shoots. Let's see. We'll have to take some time and let's see how it goes then.
Right. So on that note, Prathamesh, I mean, I think the primary question everyone's trying to ask is, how much of this is structural versus how much of this is just pent-up demand, which is the point that Nirav also made, right? And there's been obviously we're having this discussion on the back of the GST collection data that came in for October. There's also been some other high frequency data, right? The PMI, the auto sales that today, especially some numbers came out. So can you throw some light on this?
Sure. So, I think similar to the shock when we had demonetization, I think this is like a K-shaped recovery, like they call it, because some businesses can adapt very quickly, but others not so much. Like, when you have a lockdown, your tourism or hotels are like, they're pretty much shut. There's nothing they can do about it. But if you're in the education or, even doctors, for example, they're doing Zoom calls and, they're still able to talk to patients. So I think it's very uneven in terms of how the last 6 months have played out. And most of, the high growth that we are seeing is probably pent-up demand in sectors that could not adapt that fast. Or it may not have been possible at all for them to adapt. For consumer spending, I think we should keep a close eye on whether people are spending their incomes or like, are they borrowing to spend? Because that's, if they're just borrowing money, then it's just borrowing from the future. They are not going to, continue spending at the same rate after a while. But if this is something that, they're doing without borrowing substantially, then it's more sustainable.
Right. So Nirav, let's speak, about a few sectors, right? So, and maybe we can start with the auto sector to begin things, right? So we had numbers for two-wheeler sales as well, record sales for Hero, and Bajaj has done fairly well as well. Four-wheeler sales have been good too, right? And there is some debate on, how much of this is dealer versus how much of this is retail sales and so on. What do you make of the auto sector in general?
So I think, auto sector, if you see like a year ago, there was the whole thing about like moving to BS6 norms, etc. And then there were like heavy discounts, and you were seeing layoffs in the auto sector last year. So they've had some amount of pain, and then you had a period of time where A, they couldn't sell, and B, you could not even manufacture. So what has happened is definitely some of this is definitely pent-up demand. And as Prathamesh mentioned, see, it is a K-shaped recovery. See, there are a lot of people, fortunately, like people like us, who can work fully functionally from home. And at some time, you did not have enough avenues to spend your money. So there is one set of society which has pent up savings, and they can go out there and consume. And you're classically seeing auto sector, why it is even more important in India. We have like very poor data collection from the government in terms of like, if you look at like developed countries outside, you have very good jobs data, you have very good retail sales data, you have very good, India has an industrial production data, but it's very volatile. But auto sales, because of your RTO registration, and everything has to be registered, the company's private sector is doing quite a good job with motor vehicle manufacturers. So it's very high quality data, and it comes out every month. So it comes out fairly early in every month. So it's real time data. So we can use that auto data as like a weather vane, or it's like the first thing. So if you see that this is improving, most probably other things also should be improving. So it is not just like we've seen people, a lot of environmentalists actually on social media complain, oh, why are you looking at auto sales as like measure of growth? But to be fair, auto sales is like the quickest releasing data in India, and that's why it's followed very much. And from what I see is, once you've been having some sort of restrictions, and a lot of people earlier who said, I don't need a car, I don't need a two-wheeler, are going ahead and buying one. So definitely some of it is, some of it was like delayed. So it's too soon to say. Like, to be fair, it's just too soon to say, but it's a positive sign.
Right. So Prathamesh, let's move to another sector, right, which is the real estate sector. And we've seen that, we've heard reports. I mean, you can't really establish credence as much as the auto sales per se, because the data is not as rich or as verified. Yeah. But you hear of reports where the sales are stabilizing, and festive season, people looking to spend and so on. What is your opinion on the sector per se?
So far, what we've seen from companies in the listed space in real estate, or conversations with people who talk to the media, I think it's seeing a pretty robust recovery. And especially if you look at the large metro areas like Mumbai, for example, the government is trying to boost demand. They cut the stamp duty and registration charges. So there is definitely going to be a lot of previous demand, say from before the lockdown or during the lockdown. And because there's a cash crunch, or in general a problem for the builders, so they might just take a small hit and get the sale done. So I think we should see a good amount of recovery in real estate, at least in the short run. In general, even though in fact RBI cut rates, I think twice this year, and this is like being the lowest interest rates ever in a very, very long time.
Yeah.
And for this time, even the floating EMIs have reduced substantially. So I think that it's making a lot of things affordable, because the people who usually get loans are the salaried, the people who pay tax, etc. So they're already part of the formal economy, and formal economy has not been affected as badly as the informal sector. So I think in terms of affordability, like, it hasn't really gone down for them. It has improved actually.
Right. So Nirav, Prathamesh mentioned, interest rates, and RBI seems to be doing a lot to manage the bond yields as such. Is there a risk of inflation rising due to these RBI interventions?
I think like inflation in India is a lot more dependent on like government fiscal policy. And actually, because India economy might not be, but like a large percentage of population is agrarian. So a lot of it is your cyclical food prices and minimum support price. It's you've got a great monsoon, then vegetable prices are lower. Either there's too much rain or there's too little rain, and then onion crop fails and then inflation rises. So in India, like we put too much emphasis on RBI. So low rates might spur inflation, but I would say like in India, 50% of CPI basket is food, and a lot of it you might not have good control on it. I think RBI has done a few very good things. So if you go back a bit, you had a similar situation RBI was in. It was in 2008, and that time we had D.V. Subbarao as our RBI governor. And that time he toed the line, whatever the FinMin said, and he cut rates aggressively, cut down risk rates for banks to lend aggressively. But that time it was like your foot is on the accelerator. The government was spending aggressively, and banks are lending without either proper risk controls, or a lot of it was siphoned out and was turned into NPAs, etc. Right? And that did create some sort of an inflation issue, coupled with, as I said, like the government policy for MSPs was like raising them 10-15% a year for the state. Right now, again, we are faced with a crisis. We've cut rates quite low. But few things what RBI has done is they are trying to ensure that the money and the rates get lent on to the real economy. So right. Apart from like just cutting, so there is one thing which is the repo rate at which banks can borrow from RBI. So that's at 4%. There is a reverse repo rate where banks can lend to RBI. That's 3.35%. The surplus cash which they have. Right. And what RBI has done is, apart from this, they said, okay, you can do term lending. And so there is a long-term repo operation called TLTRO. Sorry, I'm getting into a bit of an alphabet soup here. But so what that does is, if you lend to certain corporates, you pledge that corporate loan, and against that you can borrow term money for 3 years. So what this has done is it has reduced the funding rate for corporates going up to 3 years in horizon. But this is only investment grade corporates, so obviously bigger companies benefit a lot more. They also said that as per banking regulations, they've cut down the risk rate on real estate home loans. But provided like it follows like a standard category, you have like 20% LTV, etc., etc. If it falls under the standard home loan criteria, then the banks have to put less capital against it. So that's also quite a positive thing. So what RBI has done also to manage like the bond yield curve, we are doing something equivalent to like the Western quantitative easing, where every week, so alternate week, so every week RBI expands its balance sheet and it has it buys some amount of government bonds, and the other week it buys state government bonds. So basically, if you look at it, for the RBI policy rate is just the overnight rate. Then a lot of corporates borrow 3 to 5 years in tenor because they have that long horizons for investments, etc. It's typically world over. If you go, it's only very highly rated corporates or governments which can borrow to 10 years or 30 years out in, right? So what RBI has done is, it's kind of, you can say like flattened the yield curve. So the yield curve is your overnight interest rate, 1 month, 3 month, 1 year, 5 years, 10 years, 30 years. So what it has done is, it's done a bit for everyone. So corporates can borrow a bit cheaper. State governments and the government of India, that debt also they can borrow. So you can say like the 10-year government bond, the interest rate on that is about 5.8%. We've had very smart economists, RBI governor, but who've not been in sync with the finance ministry. And so here you've got RBI working well with finance ministry, and instead of just like one prong approach where you just have one hammer, you've gone ahead and like tried to ensure that the rate cuts that you do are transmitted out to the real economy.
Right. Prathamesh, you want to comment?
I'd like to add a point. So, a lot, like Nirav said, a lot of the inflation number depends on the food. And in the last few months, the inflation that you see rising is more to do with supply chain breakdowns rather than, actual demand being so high. Because, you had a lot of problems with getting credit for people who transport, like the logistics industry. And due to the lockdowns, you had wastage, or some businesses just not being able to supply in time. So all of this is, I feel, transitory. It may not be something that is going to last beyond a few months. And now that everything is back to normal, I think we should see inflation stay low for a while.
Right. Yeah, I mean, what are your thoughts on everything Nirav just said? And, how do you see the monetary policy committee stance, for example? How should the interest rates move, in your opinion?
I think they've done a lot, going beyond what they did traditionally. They're, like Nirav said, they're doing what you call similar to quantitative easing, where they are lowering the interest rates on longer term bonds for governments as well as corporates, and they cut rates substantially, and kind of obliging the banks to pass these lower rates on to the consumers, because that was very important. Because if they did not, then it's just a bank that was going to make money, not the end consumer. So I think that they've done a pretty good job this time.
Right.
I don't think there is much room to cut rates beyond where we are.
Right. Question to both of you again, and you guys can come in. What are the long-term structural implications of COVID-19 you think for the Indian economy itself? Maybe Prathamesh, you could start, and then Nirav can add to this.
Sure. So I think this has forced a lot of businesses to go digital, or like digital first. You can't, even for say a retail store, they have realized that you need to have some way to be online and supply orders, be prepared for a disruption in the supply chains or in the physical world. And the way manufacturing industry today is structured, you don't really get everything in one place. So if you're making a widget with 10 parts, 5 of them are going to come from China, maybe 2 from Japan, and so on. And it is not just unique to India, but everywhere people are realizing the need for localizing their supply chains. They don't want to depend on factors that are completely out of their control. So I think there will be a lot more digitalization happening. People will have either, you have stores taking orders on WhatsApp that they did not before, or having a website. And more restaurants have joined Swiggy or other such delivery partners. And as on the manufacturing front, you have people saying that instead of importing, I'll just pay some more money upfront and buy it from a local supplier, because ultimately, if the it may be 20% cheaper to import, but if I can't get it when I need it, then it's useless, because then I can't do anything with the rest of it. So I think there will be a lot of relocation of supply chains. And I think the biggest beneficiary is going to be the tech industry, because this pandemic has really kind of forced people to do remote work all across the world. And many people have finding that it's not as hard as they thought, or they can manage the way they did in the previous few months. So I think offshoring will accelerate substantially, not just outsourcing. So I think like the previous waves that we had in the IT industry, say in the late 90s or early 2000s, was outsourcing, where they would contract out some job or some project to a company in India. And now what they're looking at is offshoring. So instead of giving it to a third party, they will open an office themselves and hire people locally. Right. And it's not just the lower cost, but they're finding that we can just do this remotely. We don't need to be, have the whole team here. We can, offshore maybe 50% or 80% of the team to India. And right. I think, because of the amount of money that has come into startups, especially in Bangalore, for example, you have a kind of a critical mass of talent in like whichever tech stack you work in, that is like available at scale. So if you wanted to open an office, say, move some people from the Bay Area or from New York or somewhere, you do actually have the depth of talent pool available in India now for a company to find it worthwhile. And this is not just India. You have people going from India to Southeast Asia, like, working with startups in Indonesia, for example, or Singapore. And I think this is going to be a big driver of growth in the coming decade.
Yeah. So I think Harsh Gupta, I think who we all follow possibly on Twitter, right? I mean, he had this quote some time back that, if jobs can move out of the valley, then technically it can move out of the US also.
Absolutely.
I think something similar could happen. Nirav, your opinion on that structural
I think,
changes post COVID?
see, like COVID is like a crisis, and what this has done is it has given everybody like one sort of a shock, and everybody has to focus on resilience versus say profit maximizing, and it is for companies, as Prathamesh mentioned, that you want your supply chain to be closer. If you go back like the older like Jack Welch GE style, cut cost, offshore everywhere, be like focus on your bottom line. And that was the focus for everyone. Even at a personal level, everybody says, how can I make most money? Or like, what can I do? Whereas not a lot of people thought, what if plan B or resilience? I think that a lot of people have realized. Second thing is, a lot of people at the lower end of the spectrum, like they've realized the help of like the whole social network that they have, where if you're like a small carpenter, plumber, electrician, you went 6 months pretty much without income, right? So again, like focus on resilience. Probably, I think one negative aspect, or what you could say like short-term negative, where I feel like the demand won't bounce back super fast, is that people who've suffered a lot from this, they'll have some sort of hysteresis. They say, okay, I need some amount of savings. I need to put it aside. I could have a shock. We had demonetization as a shock. We had this COVID as a shock. So you will see that people are not going to go and rush out and consume every penny that they have. Okay, earn today, spend today, tomorrow I'll earn again. So that part, and it goes on at multiple levels. So I think, see, this part is something which is, you would say, makes people a little bit risk averse, and you would see growth might be slower, but this growth will be a lot more resilient. So any future shocks, any smaller recessions that we face, right, you will see people being fairly used to it and bouncing back easily. That's a big difference between, say, US and Europe. In US, people are used to recessions. They lose a lot of jobs. They get another job and they move on. Whereas in Europe, people, when there is a recession, it's very tough to recover. So I think India will move to that kind of, with the gig economy, with more part-time jobs, etc. So I think this is, in a way, like, so it's not very bullish, but I think people will be a lot more resilient now.
Right. Before we started recording, we were talking about services, right? As in restaurants and so on and so forth. India has a significant services base as well. So do you see that at all recovering soon enough, Prathamesh?
Yeah, I think we're already seeing a good recovery in industries that are not yet completely shut. Like, for example, I think theaters and gyms are still closed, but as far as restaurants go, most of them already adapted to takeaways and they could kind of stay open. They may not be making a lot of money, but they don't have a survival issue. And as we're reopening now, I think they're recovering quite well.
Okay. All right. So a follow-up question is, there's a significant, do you think that there's a significant part of the capital stock that has been permanently destroyed due to COVID? And if yes, what needs to be done to change that?
So, okay, I'll go for this. So one thing is, you've had like part-time helpers, part-time, like people who are doing like small handyman jobs and domestic workers. They have seen like a big loss of income. And I think what we need to realize, I think some of those steps are being taken. You saw like a lot of people migrating back from Bombay and Bangalore back to UP, Bihar, etc., because they had nothing to eat. So in India, we have like a large surplus held with Food Corporation of India. And if they've tried to implement this, hopefully it gets implemented well. You get like one nation, one ration card, and you can buy subsidized grain. So you have enough to eat. We have food stocks for the whole country for 2 years. Thankfully, we've had good monsoons last couple of years. So it's not an issue of us having resources. We need some sort of an insurance for people right at the bottom of the pyramid, right? And because if these guys, they go back to villages and don't come back, it'll also affect like cities. You'll have lesser surplus labor who's willing to do small jobs, right? So I think that part is like a big learning about like how do you manage and how do you your crisis responsibility. So I think that is something which needs to be done. In terms of like other capital stock, like a lot of people who are too leveraged and you've just borrowed a lot of money, taken up a lot of taken a space, and you built out a gym, and that can't run. Or somebody who built a mall with a multiplex, cinemas are not going on, right? So I think that's what I was saying. Like where you think about if you want to maximize profit, you say, you know what, I borrow to the hilt, I lever up, and growth will do well, right? And everything will be fine. That's the way I make the most money. If a real estate developer has issues, he sells his apartments at a discount, maybe makes less profit. If a developer goes bankrupt, and that's where you've got like this bankruptcy code that let that developer go bankrupt, or he gets more equity injection from another stronger developer, and they finish the project and deliver that capital stock. So that building which they are building is built on time. So I think that's where we've done some amount. We've done like we have a bankruptcy code where we want, say, like take an example of Jet Airways. It's a very unfortunate thing, or Kingfisher, where the planes are there. They had assets, but they were grounded. If you had like a better bankruptcy code, somebody else takes it over. Somebody took a loss, yes, but the planes keep flying, and that capital stock is used a bit better. So I think you will definitely have an issue. You had some things, especially interest waivers and no compound interest up to a certain amount of loans, right? I think up to 2 crores. So there are palliative measures, but some amount of capital stock might be lost. But in any good, well-functioning capitalist economy and society, it is somebody else comes in, builds it again, and then we all move on. And I think that is what is important.
Interesting. So, we've done a fair bit of analysis on the demand and, how businesses could possibly recover. Next, I want to get maybe 3 or 4 policy recommendations from the both of you. We could start with you, Prathamesh. What are 3 or 4 things that the government should do for the next year?
So I think there are the easiest and most high impact kind of action would be to do a fiscal stimulus, because every country in the world right now is, spending money with, by issuing debt. Nobody is going to worry about whether your deficit is 4%, 5%, or even higher. And India is structurally otherwise sound. We don't have a problem like we had in 1991, where your forex reserves were on the verge of running out. We are in fact at record high foreign reserves. So I don't think, and there's a big search for yield across the world, because the European Central Bank has been buying their government bonds. The yields are 0, and in the US you have the Federal Reserve doing the same. They're buying their bonds. Japan has been doing it for years. So there is no problem in selling Indian bonds even in foreign currencies. We could issue bonds in dollars or euros. They have kind of avoided it for a long time because of the paranoia since 1991, when that led to a crisis and we almost ran out of reserves. But I don't think that's the case today, and we can lower our costs substantially by issuing it in a foreign currency. If that's not a preferred option, we could issue it locally and have the RBI buy those bonds, but there really should be a fiscal stimulus. In a few months back, when we were in the middle of a lockdown, it did not really make sense to do a stimulus, because you can't spend the money if you're sitting at home. But now that we are reopening, the trajectory of new cases is on a decline. It looks like we won't need another lockdown, hopefully. So if we don't, then I think this is the time to do a stimulus. You could do 3-4%, maybe a little bit more. And I don't think we really have a risk of inflation or any kind of foreign currency problems. So that's like number 1 on my wish list. The second would be something like an efficiency boost. For example, in UK, they did a scheme where to help out specific sectors, they offered vouchers or reimbursement if you spent the money in a hotel. So if you went and ordered something in a restaurant, a sit-down restaurant for £20, the government will reimburse you £5 or some part of it. So this is very specific to one sector that is particularly hard hit, and it's a great way to, spend money that it's not handouts, it's not charity, it actually helps the business, and, it kind of directly boosts consumption. That money, because that money gets spent and it keeps circulating. It's not just going into some deadweight bank account.
Right.
The third would be, I think they're doing a lot of reforms. So this might be a time to do some long pending reforms. For example, if you incorporated a company today, it still takes months. And if you compare it to something like Singapore or in US, it takes you maybe a day or 24 hours, maybe less. And I think this would be a good time to push these reforms through, because there is an interest in offshoring, in outsourcing, relocating supply chains. So I think this is a bus we should not miss. This is the time to roll out the red carpet, and not just for a big company like, say, not just the companies the size of Amazon, but even smaller companies, or subsidiaries of international companies, or even just local startups. I think we really should be doing a lot more in making sure that they can set up and get up to running immediately.
Right. Yeah, those are three great points, and especially on the reforms in terms of policy and stuff like that. I think we've done a couple of episodes on labor,
Right.
on how some of these things are being eased. Right. So, Nirav, anything you want to add to that?
So, as you mentioned, right, so I think one of my favorite proverbs is in Chinese language, in Mandarin, the word for crisis is Wei Ji. So that stands for danger and opportunity. So exactly, so what you had is, this gave us an opportunity. There was obviously danger to life and the whole society, but we've done some amount, right? We've done some labor reforms. We've done some land reforms in certain states. We've done agricultural reforms. You've done an episode on that as well. And what this has done is, these are all longer dated, all of it will pay out in the longer run, right? So I like to compare Indian economy is like an old ambassador car, and it's got a lot of rusted parts, a lot of friction, leaking fuel tank, all of that. Tires are a little bit grazed, the brake is a little loose. And what all these reforms do is, it replaces one part, another part. So overall, slowly, the efficiency will come up. One reform on its own is not going to do much. But as you've mentioned, so this is an ongoing, continuous process. But what we need is here and now, that if you want to go faster, you need to press the accelerator. So Prathamesh mentioned, yes, we need a fiscal stimulus, that we've been stuck out here. We've replaced some parts. And now, it's also about where to spend. We've done quite a bit on infrastructure. Overall, all across the country, your Bharatmala, Sagarmala, your dedicated freight corridors. So this is a time where there's a lot of spare capacity in terms of labor, so a lot of these projects, if they can be fast tracked and push ahead, make it easy for labor contractors or contract workers to come in and see what more can be done here. The aim should be to try and get to maximum employment, if possible. And that's not just wasteful employment, where you just staff a lot of people in some government jobs and no one does anything. So maybe more part-time contract work, which can be done. We've got a scheme like Narega, and we could have, that's a rural employment guarantee scheme. Maybe we could have some sort of an urban employment guarantee scheme. And it could be time bound, where you say a few things which need to be done, or some construction projects which need to be completed, and where unskilled lower end people can do something, and this gives them cash on hand, gets built, and you have encourage companies to have your ITI type training programs or internship programs, where France has a very good system where they used to have military services as compulsory many years ago. But they said, you know what, instead we can put our graduates to work in, and they encourage to work in French companies overseas, and they pay half the salary. The government pays half the salary. And this is kind of taken as a 1 year, 2 year training thing before you get absorbed as a full-time employee. So I'm not saying send Indian people overseas, but within India itself, because what you want is people to be going out there and earning money. So how do you help generate employment? And that leads to money in the hand now, and that leads to consumption, and that will go on. And in terms of, we have a lot more other bottlenecks. I think this is a good time which we can think of, if we can. I think in India, ease of doing business, I think judiciary is quite short-staffed. There's a lot of backlog of cases. There is one thing which Tyler Cowen has mentioned, the professor at George Mason University, that a lot of court cases are within government of India versus some citizens, and each time they lose, the government loses, they keep going and appealing these cases. If you just make one regulation change that accept the lower court's decision, and if you want to appeal, you need to take permissions from the highest level. And if that kind of this one line regulatory change comes in, probably we see a lot of backlog reducing. And these are few things that I think, one is the longer term reforms, and how do we unclog this whole old car that we have. We don't have the money to buy a Ferrari. So one is, how do we keep improving on this? And second is, we need to press the accelerator now. I think you've got RBI doing its fair bit. They've tried an eased monetary policy. I think we need the government to start acting now. And we need our Minister Gadkari. He had done been quite frank conversation with the guys at NHAI. So it's not about government spending, but also effective government spending. So get those projects, get them done on time, focus on efficiency. This is all easier said than done. But I think that's the only way out.
Right. Yeah, fantastic points. I just have one question on the stimulus itself. I mean, we've been hearing this, right, forever. I mean, this whole year we've been saying, when is the stimulus coming? And, also given that the government has been generally fiscally very prudent, I mean, it was expected much sooner as well. Just a question in terms of what the stimulus will look like. I mean, how will it be delivered? What would be the split of how would it pan out, basically? I mean, I think both of you can take this. Nirav, maybe you can start.
So I think we've got a decent Jan Dhan Yojana, right? So a little bit is trying and putting cash with people. And specifically this maybe a few thousand rupees doesn't really make a difference to someone who's very well off or earning. But for a lot of people, I think it's survival. So I think that part. Second thing is, as I mentioned, some sort of employment boosts where you can say you spend, if Reliance wants to hire a lot of fresh graduates, a lot of people are graduating right now, or an Infosys or something. For the first year, the government gives some sort of a benefit to the company, right? And provide it. So this is only, it's either you use it or lose it. So I think that kind of a system. Even for small SME businesses to hire people, I think that's a useful thing. And then obviously we need to push money in where we really need it. So India is a country short on infrastructure. So spend and approve a lot more projects, which kind of kickstarts a cycle. The construction companies get something, they buy cement, they buy steel, and then their employees get salary and so on. And as well as you could give targeted tax breaks. So if you want to upgrade your PC, or you say a lot more work from home, or buying a desk or something of that sort, you could give targeted tax breaks. In UK, how they've given for restaurants, where you can claim back what money you spend in restaurants, etc. So you could give targeted tax breaks for a lot of household expenditure on consumer durables. You say one-off, either a GST rebate or offset against your income tax. So that can help on consumption at the higher end of people who have disposable income. If you're getting, why don't I upgrade my laptop, or why don't I buy a new Mac? So those kind of things can help.
Right. Prathamesh, anything you want to add to this?
So I think what US or Canada did, for example, which is directly putting checks, they just put $1,000 check in people's bank account. I don't think that is possible at the scale at which we operate, and it's prone to maybe corruption or leakages. So I think this would be, like Nirav said, more targeted either in terms of front-loading infrastructure spending, which I think is a pretty good way to go about it, or giving specific tax breaks or maybe cuts to the GST for certain sectors. Say for 6 months there is no GST on certain kinds of services or products, because that's the only way you can ensure that the money is actually spent and it actually remains in the economy. On this point, India's income taxes, for example, are really, really lopsided. Somewhere around 5% of the population files taxes, and maybe 2 or 3% actually pays the taxes, because out of those five, there are still people that are exempt or don't actually have to pay something. And even out of that very small minority, the bulk of it is paid by a very small percentage within that one or like few percent. So there's a limit to how much we can squeeze out of it. So the only way out is you have to widen the base. You can't, squeeze more and more out of it. Because, so for example, the top tax rate is somewhere around 42%. And it's almost like an incentive for people to emigrate. So you can't go to maybe 50 or 60. That's something we tried in the 70s, and we got a lot of black money. We got a lot of corruption and tax evasion. So I think while we need to spend, we need to make sure that we don't end up repeating the same mistakes we did last time.
Right. So I want to pull back a little bit and talk about the larger picture, which is that $5 trillion GDP growth, right? I mean, GDP number that the Prime Minister has alluded to as well. Prathamesh, in your opinion, do you think that is still achievable by 2025?
I think it's a very path-dependent kind of prediction, because there's a lot of uncertainty involved globally as to how fast COVID recedes all over the world. India cannot grow if the world is not growing as fast. So to a degree, a lot of our growth numbers also depend on how other major economies are doing. And that's not something that we can address yet. But assuming, let's say, we get this under control, or a vaccine comes out, and sometime by middle of next year or so, this is largely under control globally, then I think we should see a recovery to the pre-COVID 7 or 8% growth. And if the kind of reforms we have done, if that leads to more an accelerated cycle of higher FDI inflows, more relocation of supply chains, so on, or more offshoring, then I don't think we should have a problem with the currency. I think we should see appreciation in the Indian rupee. So if you assume that we grow at maybe 8% and the currency appreciation of 5%, then we could get to 5 trillion in about 6 years. I mean, it's a long shot. I don't know if we can do it. Maybe the path doesn't exactly go up in a straight line. Maybe it's more backloaded, where we grow slower initially and pick up after 3 or 4 years. Or it could be that we grow much faster, in the first couple of years and then slow down a bit. But I don't think it's a stretch. I mean, maybe it's off by a year, maybe by 2 years. But right. I think it's on track.
Nirav, do you share that same optimism as well?
I think, yeah. No, so I think definitely, as you mentioned, right? Like, it depends on a lot of external factors. But I would like to say, like, we've learned a lot from the mistakes that we've made. So we were growing very fast before 2008, and then we hit a roadblock. And then we made like a couple of errors, which now our policymakers have understood. So when the oil prices fell, like when the oil prices rose too high, we kept them stable at the retail level, and we let our fiscal deficit run too high, and we were just subsidizing oil consumption. And I think that part where we deregulated diesel prices, petroleum prices, slowly on the way to remove the subsidy from kerosene, and so that part was one big mistake we made, where we couldn't do much of fiscal stimulus. And so that has been taken care of. The second part, as Prathamesh mentioned, is we have not let our currency appreciate. That's again due to RBI policy, proactiveness. Because when you have a recession, our demand for imports falls. So that has fallen off the cliff. But so instead of letting the currency appreciate because we are importing less, what RBI has done is they've built a war chest of reserves. So when our economy restarts, when demand increases and we start importing more, at that time our currency won't weaken a lot. So I think that's what happened after like 2008, 9, 10. So we've kind of learned, and yes, we've done like a lot of reforms. which will improve our efficiency, and like kind of our trend growth, which was say around 6%, could go to 8. So yes, we'll reach like a 5 trillion economy, maybe 2026, maybe 2027. I think it's not about just like the target. It's like a big number which gets everybody thinking positively. I think that's very important. If people believe that next year will be better than today, and then the year after will be better, so people will take risks, start businesses, consume, spend money, and I think that part is what will drive the society. So I think it's a matter of when, but we will definitely reach 5 trillion in size in our GDP. So it's just a matter of like, is it 2026 or 2027? This year, 2020 has been pretty much a write-off. So we can say, you know what, all targets are delayed by a year, and we should get there.
Right, right.
So I'd like to add a point. Before like 2013 or so, we had a big emerging market currency crisis then, and a lot of currencies depreciated. So, or even I would say before the US-China trade war, a lot of growth came from global trade. And after 2008, it kind of slowed down a bit. And in the last few years, it has pretty much been flat. So if you're a smaller economy looking to grow from exports, it's no longer possible. That train has left the station. But on the other hand, India has the advantage that we have a large consumption-based economy. We were never on the export train. I mean, we missed the last train, but it kind of helped us now because at least we are more suited to growing through internal organic growth. So I think what should be the focus is reducing the consumer good imports that we currently buy from China, for example, electronics, smartphones, etc. And if we can make the same consumer goods here, or at least increase the value add share in India. So for example, you might still import components from Japan or Korea, but maybe 60% of the value is now in India instead of overseas. So that will go a long way in reducing our imports. So I think what our focus should be now is not that we can do what worked for China or other countries in the previous 20 years, because that's not going to work for us now, because there isn't anybody to export to. Although everybody wants to reduce their trade deficits. So what we should be focusing more is reducing our imports, just like everybody else, and making sure that we can be more self-sufficient in a way, Atmanirbhar, in whatever we consume. Right. So rather than importing just finished products, we should be more focused on importing the raw materials and getting the entire supply chain here. So we are already seeing moves in that. So for example, the government is offering a subsidy for manufacturing, or linked to how much they produce and they export, or to pharma companies for manufacturing the APIs. So I think these are all good steps, and they are all going to help reduce the current account deficit. This may not happen overnight, but it's definitely going to play out over a full economic cycle.
Right. So, we've focused plenty about India's growth and what we must do, but this is also in context of the global economy. And since both of you are, very interested in macroeconomics as such, the final question to both of you is, what are some trends globally that will evolve over the next 10 years, and how will this influence India? Nirav, we could start with you, and then Prathamesh could add.
Okay, so I think at end of December, I put out a long thread of threads. So I said there are a few major things, and so I said one trend definitely is demographics. I think if you look at the Western world, they are a big baby boom between 1945 to 1965. You see three presidents. So are born in 1946 in the US. That's Trump, Bill Clinton, and George W. Bush Jr., right? And they were a very lucky generation. You had very few kids born before, and they had everything given to them on a platter. It was easy to get into school, to college, jobs, etc. But now this whole cohort is retiring. So I think that one part is you're seeing the Western world is aging, and whereas in India, you're seeing a big boost in working age population, and we're seeing lesser number of dependents. So we've reached where East Asia was in the 80s. And I think so that is very big productivity boost to India. So that's one. Second, I wanted to say a big trend is you're going to see energy transition. So we are moving from a fossil fuel based economy. So like coal for power generation will slowly be phased out. You're seeing more renewables. You're seeing more electric cars. Electric battery storage is going to be cheaper. And this part where India had like a big constraint on its growth was its energy was all imported from outside, and this was leading to price shocks and slowing down on manufacturing. So I think if we have like here is where India could give in a lot more incentives for renewable energy. So wind farms, distributed solar, and so that is one big trend for the coming decade. I feel one other trend which I would really like to say is if you look back every 10 years and at each decade, there is a different sector which are like the top 10 companies in the world. And like, see, right now it's like all tech. If you see that you've got the FANGs and then you've got like Alibaba and Tencent. Tomorrow we have like Ant Financial IPO, another big Deca unicorn, like mega unicorn, which is going to IPO. And right now it's all tech. But like say 10 years ago, tech was in a bad shape. A lot of them were like ExxonMobil at one time was the biggest company in the world. And like 10 years prior to that, you got the dot-com boom. That time tech was big. And so each time you've had like a different cycle. And I think that's why I think big mega tech companies might not do as well. I think regulations and like antitrust laws will catch up with them. So they will have to spend more on regulatory things. Like banks have had the same issue that they were very profitable earlier, but now due to like more prudent risk control and better capital requirements, like they cannot take as much risk. So globally, banks are not as profitable as they were before. So I think I'm a little bit bearish on tech. And I think there to like save costs or to add resilience, you'll see a lot of, so I wouldn't buy like US tech shares, but I think they'll create a lot of job opportunities in India, but they'll have cost pressures as well. So maybe move to a cheaper location. So I think these are the big broad trends, what I feel. And I think one more is India did reforms in 1991 that helped India A, which is like the top 10% of the population. I think our reforms are like manufacturing companies and labor laws, which is ease that's going to help like the next 25%, which is India B. And I think India C, which is like dependent on agriculture, is 65% of the population. And now what we are having is these two parts of the society will start growing faster, start contributing more. If agriculture can grow a little bit better, we will not have to spend money on farm loan waivers. So that money can be spent elsewhere. These people will consume more. So I think these two are other engines which will start firing in the Indian growth thing. So I think, yeah, so these are like, I would say like basic broad trends I see.
Fantastic. Prathamesh, anything to add to that from a macro perspective?
A little bit. I kind of agree with all the points that Nirav made. I think the big ones to watch out for are electric vehicles and renewables, because it's kind of a virtuous cycle where you have falling energy costs. I think solar is now cheaper than coal for new plants in some places. And so if you get a lot of cheap electricity, you can build out charging stations, and you can if you build enough capacity for the batteries, then your storage is cheap, and your cars kind of become cheaper over time instead of increasing in cost. So right now the price of batteries is somewhere around 100 or 110 kilowatt hours. If you for example for Tesla Motors, and they expect that this will drop to maybe $70 in another 3 years. This is even faster than what was predicted a few years before. So it's already maybe 80% cheaper to operate an electric car as opposed to a petrol car. And in India we have something like more than 100% tax on the cost of petrol, because we import almost all of it. So in a way, we will reduce our energy imports. We save on the forex that we get, and we also improve our logistics. So I think we increase our manufacturing competitiveness if we get better logistics and infrastructure. We reduce the current account deficit, which kind of strengthens our currency. And at the same time, we're seeing the wave of offshoring accelerate. I think this is still very early days. This will play out over a decade. So overall, I think we could get to a structural current account surplus because our biggest imports today are consumer goods like electronics, gold, and energy imports. Out of these, if you are manufacturing locally, like more and more of the value chain, then you're going to cut down on that. If you are instead of importing oil, if you're just importing maybe some of the raw materials for making batteries, that's going to shrink substantially. And if you're generating solar or wind, then you don't need coal imports either. So, and while your exports are not really affected, if you're exporting tech, you're exporting services, that's still going to grow very fast. In fact, services is one sector that has been largely immune to trade wars because services are not that easy to outsource yet. Like it wasn't before until the pandemic. So all the tariffs and stuff is mostly focused on actual physical goods. So I think this is an opportunity for India because even if you're doing something in the physical world and maybe part of your support staff is offshore, at a much lower cost country, or your engineering team is in Bangalore, then you have a cost advantage over your competitors in another country. So I think we're kind of getting to a point where if you have a current account surplus, it's a virtuous cycle. You can issue foreign currency bonds, you can borrow cheaply, your companies get benefit from a strong currency because they can buy their competitors, they are much smaller in relative terms. Then again, because you have an open current account, maybe say in another 5 years, you can freely invest abroad, the demand for gold comes down. You can move up the value chain when you are a strong currency country because you don't need to rely on a cheap currency to be competitive in the global marketplace. So I think this kind of getting to this point where we can trigger this cycle is the key thing for this decade.
Right. Wow. That's
just to add to Prathamesh, I think one leader in electric vehicles is China. And I think what they've done is a lot has been government policy. So they've encouraged all city public buses to be electric. Right. So I think the government, that's fiscal stimulus. Even if we import our first set of buses from overseas, maybe China, we buy Chinese buses, and that not only reduces pollution, we get buses which consume power instead of diesel, and reduce noise pollution, reduce pollution in the city. And at the other end, it's a barbell strategy. Encourage electric two-wheelers. And you're already seeing Ather Energy and you're getting electric Chetak from Bajaj. So I think, so exactly, I think you start off with a push for at the barbell. So you say, okay, electric buses go on a standard route, they can charge at night, etc. Electric two-wheelers, till the time where the battery technology improves and electric cars become mainstream. So I think some sort of a government push here helps. And another thing which is I think India has on the agriculture side, actually, India has this whole MSP, very quite high MSP for grains, so rice and wheat. And we were importing palm oil from Malaysia. And one of the things they've done this year is they've increased the MSP for palm oil, oil seeds, and so that we reduce our import dependence. I think so. In this way, you're seeing a lot of countries importing soybeans. China imports soybeans from US and Australia and Brazil. If India, instead of growing excess rice, maybe they grow soybeans, and our agriculture could be a big export earner for us as well. So I think these things where we need a little bit of a nudge, little bit of government policy, and if we do that, I think it can be a lot more productive, if I were to say that.
Right. Wow, this is a fantastic list of ideas. I mean, very creative, very imaginative, and good to know that there are so many paths we can go by, and we can spur growth, right? So this is a great conversation, Nirav and Prathamesh. A lot of rich information. Hopefully, this reassures our listeners also on our growth prospects, and maybe when we do a follow-up some months down the line, we have more optimism to share, right? Sure. Thank you so much, Nirav. Thank you, Prathamesh. Really enjoyed this conversation. Thank you.
Thanks, Roshan.
Thanks, Roshan. Thanks, man.
Yeah, great to have you. Thank you for tuning in. This podcast was brought to you by the team at Bharatvaarta. If you liked this podcast, then don't forget to share, subscribe, and rate us on your favorite platforms. We're available on Anchor, Apple, Google, Spotify, Stitcher, Breaker, YouTube, and a host of other platforms. We started Bharatvaarta to facilitate long-form discussions on politics, policy, and culture. We don't necessarily endorse anything that was said in this episode. If you do wish to offer us any feedback on the content or anything else, do reach out to us on social media or get in touch with us on our website, www.bharatvaarta.in. The links are in the description below. Thanks again for tuning in. Until next time, stay safe, take care, and Jai Hind.